Welcome back to Market Watch Daily. I'm TMI, and today we're taking a deep, extended look at GameStop, its latest earnings report, what the numbers reveal about the company's direction, and how a major move into Bitcoin could mark a turning point in its strategy. Smash that like button and subscribe for more long-form deep dives into the companies making headlines and shifting markets. Let's get into it. Chapter 1. GameStop's Q4 and full year 2024 earnings, a detailed overview. GameStop reported net sales of $1.283 billion for the fourth quarter of fiscal 2024, down from $1.794 billion in the same quarter the previous year. That's a steep 28.5% decline, a clear signal that the company continues to face serious headwinds in its core business. That said, not all the news was bad. In fact, GameStop reported net income of $131.3 million for Q4, more than double the $63.1 million it earned a year earlier. This dramatic improvement in bottom-line profitability, despite falling revenue, highlights the company's success in cost control and operational efficiency. Chapter 2. Breaking down the financials line by line. Let's look at the numbers in more detail. Revenue performance, C. The 28.5% drop in revenue indicates that GameStop is struggling to keep customers engaged, especially in a rapidly evolving gaming and retail environment. Factors likely contributing to this decline include lower foot traffic at physical locations, weaker software and hardware sales, and the continuing shift toward digital distribution. Profitability, B. Despite the revenue slump, GameStop's net income rose sharply. This tells us that management is effectively managing expenses and driving operational improvements. With net income at $131.3 million, more than double the prior year's $63.1 million, GameStop's cost restructuring and store closures may be paying off. Earnings per share EPS, B+. While the report didn't specify EPS, the rise in net income strongly suggests that EPS followed suit. This metric is especially important for shareholders, and the current trend is encouraging. Gross margin, A. GameStop reported $363.4 million in gross profit for the quarter. While we don't have the exact cost of goods sold, this figure represents a solid improvement and shows the company has maintained strong control over product costs and pricing strategies. Operating income, C+. Operating income was $79.8 million, a clear sign that GameStop remains profitable at the operational level. While it's still far from the highs it might once have enjoyed, positive operating income is a strong indicator of core business health. Cost management, SG&A. One of the brightest spots in the report. SG&A expenses fell by over 21% year over year, from $359.2 million to $282.5 million. This significant reduction shows GameStop is serious about becoming a leaner, more efficient company. Liquidity, a plus. With $4.775 billion in cash, cash equivalents, and marketable securities, GameStop is in an extremely strong liquidity position. This gives the company massive flexibility for future investments, strategic pivots, and even potential acquisitions. Chapter 3. What's driving the turnaround? GameStop's transformation under Ryan Cohen continues. The company is shifting from a traditional retail model toward a more digital-focused strategy, with an emphasis on e-commerce, collectibles, and strategic investments. The reduction in SG&A costs and strong liquidity point to a disciplined approach, but GameStop's challenge will be reigniting top-line growth. Cohen's focus has been on cutting inefficiencies and pushing the company toward a longer-term vision, one that could include gaming tech, digital assets, or even fintech integrations. Chapter 4. Challenges still loom. Despite positive profitability and cost control, declining sales remain a concern. Revenue is ultimately the engine of growth, and the current decline suggests that GameStop hasn't fully cracked the code on its transformation. The company faces pressure from shifts to digital downloads, competition from console-native marketplaces like Xbox and PlayStation, ongoing questions around relevance in an age of cloud gaming. Chapter 5. The Bitcoin move, a strategic shockwave. Now, let's get into what might be the biggest headline of all. GameStop has updated its investment policy to include Bitcoin as a treasury reserve asset. The decision was unanimously approved by the board and announced on March 25, 2025. The company currently holds $4.775 billion in cash. Even a small percentage allocation to Bitcoin could have ripple effects across both the crypto and equities markets. Why does this matter? First, this isn't a gimmick. Bitcoin is increasingly being adopted as a hedge against inflation, and a long-term store of value by corporations. MicroStrategy pioneered the move, and now GameStop, a company that's long lived in the intersection of meme culture, retail investing, and volatility, is stepping onto the crypto stage. Second, GameStop's endorsement of Bitcoin could reignite broader institutional interest. The announcement was welcomed by Michael Saylor, the Bitcoin bull behind MicroStrategy's own massive BTC accumulation. His response? Welcome to Team Bitcoin. Third, this move gives GameStop an entirely new narrative. The company is no longer just a legacy retailer in transition. It's now part of the Bitcoin Treasury Club, a digital-first asset allocator in an age of monetary expansion, AI dominance, and financial innovation. Chapter 6. Strategic implications of the Bitcoin pivot. By adopting Bitcoin as a reserve asset, GameStop is signaling that it views digital assets not only as a hedge, but as a potential driver of future value. The liquidity it holds can now be partially deployed in a high upside, decentralized asset that aligns with the ethos of its core user base: digitally native, risk-tolerant, and forward-looking. This could also open the door to crypto payments in retail, NFT and blockchain-based loyalty programs, partnerships in Web3 gaming, further asset diversification. Chapter 7. Market reactions and investor sentiment. The announcement has sparked a wave of interest across X, formerly Twitter, Reddit, and financial news circles. Many retail investors are excited to see GameStop join the ranks of crypto-aligned companies. Tesla, MicroStrategy, and Square saw similar surges in attention after their Bitcoin announcements. Traders are now watching closely to see what percentage of the treasury will be converted into Bitcoin, how soon it will be reported on financial statements, whether other companies follow GameStop's lead. Chapter 8. Is GameStop a buy? That's the big question. Here's what we know. The company is controlling costs better than ever before. It's profitable with solid operating and net income. It has strong liquidity. And now it's embracing one of the boldest financial strategies available. For long-term investors who believe in Bitcoin, digital transformation, and the resurgence of the GameStop brand, this may be the beginning of another wild chapter. Conclusion. GameStop's Q4 earnings tell a story of sharp discipline and cautious optimism. Revenue is down, but profitability is up. Costs are being cut, and cash is stacking. And now, Bitcoin enters the chat. As we head deeper into 2025, GameStop may no longer just be the poster child for meme stock mania. It could be an evolving digital holding company with a crypto-forward balance sheet and a leadership team willing to take big swings. We also are going to be on watch for Roaring Kitty. We never know when he might stop by to give us his take on all of this. That's it for today's Market Watch Daily. I'm TMI. Smash that like button and subscribe if you found this breakdown helpful. We'll keep tracking GameStop, Bitcoin, and everything moving markets. See you in the next one.